Hey team, making this video for you about the weekly, daily range pivot points that I use throughout the week. Now, I feel like these are some pretty strong pivot points, and price really interacts with these plots pretty regularly throughout the week, and it gives me a really good indication of where price may end up either going or where it's come from. Good entry criteria, exit criteria, where I can then utilize ICT concepts to find those entries and target those exits. And I just feel like these are pretty powerful things that you can either keep on your chart or at least have on your chart while you're in a trade, so you can really see where these plot points are. So let's get into it. Where do I get this indicator? Well, it's free on TradingView, so you just go into your TradingView indicators and search for daily, weekly, right here, and then it's this one. I started. It's SBTNC, so that's the one that I use. It's there's a number of these, but the ones that I use is daily, weekly, monthly, yearly opens at SBTNC. So once you click on that, it will go into your chart, and you will see that it starts plotting the weekly plot line. I just use the normal settings on this. I don't change it. So these are the way the settings come. This is the default. I don't change any of it. So I haven't played with it in that way. I just use them as reference points throughout the chart to let me know where, like I said, where price may go, where it has come from. So again, the weekly plot line is yellow, the daily plot line is green, and these are the main two that I use. These are the main two that I use all the time. The monthly is a red plotted line that's out of the screen, and I mean, obviously, if the monthly was in play during price, then I would obviously use it as a reference, but it's not in this week. Let's get into it. Why would I use it? So price seems to interact with these plot lines on a regular basis. As you can see, we get to it, we've got a lot of nasty movement around it. We reject it again, then we break through it. It becomes support. Here we have a nice large down move, but in the middle of this down move, we hesitated around the weekly. So this could have been an area in which you could have used to enter this down move. You could have targeted the weekly right here as an exit point. So let's actually back this up to where it starts plotting. Let's go to Monday at about, I want to put it in right before the Tuesday comes in. So this is what it'll look like when the week starts. Let's go ahead and widen the screen again. This is what it looks like when the week starts. The weekly and the daily will plot on Sunday night at 6 o'clock, and it'll be the same line. So when you come to the charts Monday morning, this is what it'll look like. As you can see, price comes in. Let's go ahead and make this a little bit larger. So price is above the weekly and the daily where it is open from. We've got a little bitty gap down here. We set in this little trend line. We come get that liquidity, and then we bounce from it, and we start pulling up. So during the morning hours, this would have been during a live stream, or during the time when we're usually on the live stream. And then price rejects out of this consolidation. If you were able to get in on this rejection, let's say you got in short right here because we broke down, we set in this nice consolidation. Looks like a bear flag / liquidity pool. So let's go short. And if you got in short here, where is my target? Well, clearly we're targeting some liquidity lows, and then the overall target could have been this daily. Now this is market open, and I understand that, but as you can see, market open at 9:30, it slams down and basically stops right on the daily, weekly pivot line. Could have been a good target. It's a good reference point. As you can see, price bounces around it for a few minutes, 20 to 30 minutes, and then for the next hour, we kind of react to it. Once we get this second rejection of it, there's you an ICT concept short, fair value gap. You could have taken it. Here's a break of structure with fair value gaps. Could have went short here. Nice consolidation through here as we break down even further. The next day comes in, as you can see, we don't have the daily line with the weekly anymore. It has shifted to where the Monday night at 6 o'clock opens up. So Tuesday starts to roll around. We have the Asian session in play right here. We are above the daily. It's not interacting with it at all. And then overnight, we get this move. And I think this might have been the Japanese data that came out that kind of strengthened the dollar, maybe hurt the market or something. This was obviously some type of news event. But we get a breakdown through the daily overnight. Price plays around down here. All right, now we're in to the London session. As you can see, we start getting these kind of moves. If you're playing the London session, it's still okay. And as you can see, we have a structure shift right here. So you could start looking for reasons to go long during the London session if you wanted to. This nice little liquidity grab and push could have also been a nice reason to get in. We actually take the highs right here during the London Open. So this could have been another ICT concept entry. And if I were to enter down here, my eyes are looking at the daily. We've got obviously these highs right in here. We've got this huge fair value gap right there. But my eyes are looking at the daily because how do I pick a spot within this fair value gap? This is probably not going to be great risk reward. And then we have the daily up here. Look where it goes to, right to it. Could have gotten into an entry, stop below down in here, and then that would have been a great trade on the second day. And as you can see, price really interacts with the daily all the way through it. And then the morning session, Tuesday's open, happens right in here. So as you can see, Tuesday's open, the market opens up at 9:30. This indecisive candle, it comes down, grabs some liquidity, and then shoots up, breaking through that daily, comes back and basically retests this fair value gap and everything. Once you break back above this daily, you could have looked for entries right in here. As you can see, we come back and cover this fair value gap and then go long. Could have targeted this area or even the weekly. Here is Tuesday. Tuesday night, we're going into the Wednesday plot line. You can see how price just reacts to this perfectly. This right here is an Asian session long to the weekly, and that would have been perfect. Could have gotten in here. This would have been the kill zone, ICT kill zone between 7 and 9 p.m. This right here would have bounced. You had structure. We break structure. You go to a lower time frame. You might have been able to find an entry right in here in order to take this long to the weekly. As you can see, price really does interact with these very well. And obviously, if you miss this long, you could have taken a short off of this weekly once it rejected a couple of times. And then again, right here, London session. Price comes down, interacts with the daily. Could have found on a lower time frame an entry right here and targeted the weekly again. Price interacts with the weekly, rejects it, comes back, takes liquidity. Could have taken a short right here based off of this ICT concept fair value gap. Taking liquidity right here, this rejection of the weekly. We could have targeted the daily here. Might have gotten stopped out. Could have been looking the other direction as well. Now that we've broken above the weekly, market is open right here at 9:30. Could have been looking for longs here once we break structure there. ICT concept more than likely entry right in this area, and then this huge push off of the weekly. This is going to be Thursday's daily candle. I know it's Wednesday night, but this is going to be Thursday's daily candle. This huge range that it's trading in right now. This could be a good sign of a rejection or even a continuation now that price is giving you this daily has come in for this pivot. We'll do one or two more examples of this. So here we go. We've got a nice rejection and then a return. Let's see if we go bearish from here. We have structure right here where I would like to see us get a break of structure right in there. And this would give us a decent entry. There you go. We get a break of structure. Fair value gap is right there. We could go ahead and enter the trade right here. We could have an entry right there on the fair value gap. I'm going to place my stop above the daily pivot because this is where I don't want price to reject to. I do know that I have a fair value gap right here. I could go ahead and place it way up here, but to me, that's a little bit, depending on which, what you're trading. If you're trading micros, you could easily come back up here. If not, my risk is going to be right here. I don't want to see it break through the daily anymore. So we're in. We do get a retracement up into liquidity one more time. We hold that stop. And then my overall target will be down here at the weekly. Obviously taking partials throughout this trade. And then as you can see, we get this push all the way to the weekly, and that is where price actually starts to stall at. It does continue way further. But this is how I use these pivot points. If you have any questions about it, just send me a message. You can email me at joey@reallifetrading.com or send me a DM in the Discord, and we can have a sit down and talk about it. Appreciate you, and see you in the next one.